Hi, this is Zak Mir, editor of Spreadbet Magazine, with a look at some bulletin board hero stocks on Monday, September the 22nd. And I'm starting off with Atlantic Coal, where we've had a rebound off an extended rising trend channel from April last year. Floor of the channel around the 50-day moving average level of 0.13 pence. But the big development at the end of last week was the way that Friday's price action was totally above the 200-day moving average at 0.17 pence. And that should provide for a decent end of day close stop loss level as we seek out new highs. The other reason for the optimism is the overall pattern here since last year looks like it's a W-shaped reversal. Something we should take the stock back up to the neckline resistance of 0.3 pence or 0.35 pence, which is also the top of last year's channel. Any weakness in the interim, or at least initially, towards the 200-day line is regarded as a buying opportunity, as that would unwind the overbought RSI towards the 90 level. Next up is a favorite of most bulletin board traders or followers, and that's rare earth minerals. We've finally seen this consolidation that we've had since the July peak. We've finally seen a reasonable rebound, a good reaction off what looks to be the floor of a rising trend channel from the end of May towards the 1.3 pence level. Decent reaction, as I said, on Friday, just back to the 50-day moving average around 1.6 pence. What we'd ideally like to see is an end of day close back above September resistance to date, which is around the just around the 1.5758 level. Maybe one more day, but really the RSI is also already flagging the idea that we should see further momentum here, and the long assumed target towards 2.4 pence over the next 1 to 2 months, or actually probably much less given the way that the shares bounced back at the end of last week. Finishing off with Wild Horse Energy, and here we've got sort of the start, what looks like to be the start of a reasonable bull run here. Obviously, we've had the breakdown since the start of the year, but an extended base and the weekly close back above the 50-day moving average should be enough to take the shares higher in the near term. The stop loss on the bull arguments, the floor of a rising June price channel, and the 20-day moving average at 0.33 pence, and the target, which obviously looks a little bit optimistic at the moment, but the target is towards the 200-day moving average at 0.96 pence, and that would also tie in with the 0.9 pence plus resistance of the June channel. If you're cautious on the shares, allow any dips towards the 50-day line or just below 0.4 pence to be your entry point. That's it from me. More updates at spreadbetmagazine.com.